Welcome to this deep dive. Today, we are going on a bit of a mission for you. We're going to trace this hidden financial breadcrumb trail to uncover how a really dense corporate document basically reveals a massive, totally overlooked shift in the tech hardware landscape.
Yeah, and we're looking at a pretty specific stack of materials today. The main one is a recent SEC 8K filing. This is from December 2nd, 2025. And we've also got this really sharp set of market analysis notes that kind of connect the dots for us.
Right, because usually reading an SEC filing it's like looking at a 3-foot-long grocery store receipt.
Totally. It's completely dry.
Yeah, you just scan the barcodes, your eyes glaze over, and you toss it. But today, it's like we found a treasure map buried right in the fine print of that receipt.
Exactly. And to really understand the end game here, we first have to look at the loudest document in the stack, right?
Yeah.
The December 2nd filing.
Okay, so let's get into it. What exactly happened on December 2nd?
So Marvell basically announced this agreement to acquire a company called Celestial AI Inc. But the acquisition itself isn't the craziest part. As part of this, Marvell entered into a transaction agreement with Amazon. Amazon and its affiliates, technically.
Wait, concurrently with the acquisition?
Right at the exact same time.
Yeah.
And this agreement includes a warrant that allows Amazon to acquire up to 1,045,171 shares of Marvell common stock.
Over 1 million shares. I mean, to put that in plain English for everyone listening, a warrant is basically, it's like Marvell handing Amazon this super high-stakes exclusive VIP coupon, right?
That is a great way to put it, yeah.
Like, hey, Amazon, we're buying Celestial AI, and here's a VIP coupon for over 1 million of our shares, which sounds insane.
It does sound insane. Why would they just hand over 1 million shares?
Right.
Well, the secret is really in the specific rules about how and when Amazon is actually allowed to use that VIP coupon.
Ah, so there are strings attached.
Major strings.
Right.
The warrant shares don't just unlock automatically. They vest based on Amazon's purchases of what the filing calls photonic fabric products.
Photonic fabric products, okay.
Yeah, and they have to buy these either directly or indirectly all the way through December 31st, 2030.
So they have 5 years. 5 years to buy a massive amount of this specific tech. But what does it actually cost them to use the coupon?
So the exercise price, that's the cost Amazon pays to actually buy the stock. It's locked in at exactly $87.000009 per share.
Wow, they went right down to the decimal.
Yeah, they really did. And that price is locked until December 2nd, 2031. But here is the massive discrepancy that the analysis notes point out.
Okay.
Marvell is currently trading at over $139 a share.
Wait, what?
Yep, over $139.
Hold on. So Amazon gets to buy it at $87, but it's currently worth $139.
Exactly.
That's a built-in discount of what, like over $50 a share?
Roughly, yeah.
So wait, if you multiply that $50-ish by the million shares, Amazon is essentially looking at over $50 million in immediate built-in profit, just on paper.
Right. And because of that massive discount, Amazon is just incredibly incentivized to buy as much of this photonic fabric volume as possible so they can unlock those shares.
Okay, wait, I have to push back on this mechanics here because this sounds completely backwards to me.
How so?
Well, Amazon is essentially being financially rewarded by Marvell for buying the exact tech, this photonic fabric, that they already need to run their servers, right? I mean, Amazon runs AWS. They're always buying server tech. It's like getting paid millions of dollars just to do your regular grocery shopping. Why would Marvell essentially bribe them with $50 million to do what they're going to do anyway?
Well, see, it's not exactly their regular grocery shopping. That's the key. This brilliantly guarantees massive sales volume for Marvell's newly acquired tech from Celestial AI.
Okay, so Marvell wants to guarantee the sales.
Exactly. You have to understand that shifting from traditional electronic networking, standard copper wires, to this new photonic fabric, which uses light, that is a massive, expensive architectural shift.
Oh, so it's not just swapping out one brand of router for another?
Not at all.
Yeah.
It requires a titan like Amazon to commit to standardizing it. Marvell is subsidizing that transition. They're basically paying to make sure their specific tech becomes the absolute industry standard.
Okay, I see. So we've established that Amazon is now financially, extremely highly motivated to buy a mountain of this photonic fabric from Celestial and Marvell.
That's a literal mountain of it, yeah.
But this is where we actually follow the supply chain down.
Right.
Because the real hidden gem in our notes isn't Amazon or Marvell.
No, it's not. The analysis notes point out this really fascinating two-hop connection. It maps Celestial's photonic fabric straight down to a company called SIVERS.
Sievers, that's SIVE on the ticker, right?
Yes, exactly.
Yeah.
SIVERS. And Celestial relies entirely on SIVERS as a critical laser supplier to actually make the photonic fabric that Amazon is now, buying in massive quantities.
Wait, really? Sievers makes the lasers?
Yeah, you can't have photonic fabric without the photons. And SIVERS makes the lasers that generate that light.
I love this so much. This is like the ultimate picks and shovels play. I mean, think about it. The rest of the financial world is obsessively fixated on these giants, right? Amazon and Marvell, they're out there digging for gold, and everyone's watching the gold miners.
Right, they're watching the headlines.
Yeah, but nobody's looking at the tiny factory that's actually manufacturing the most crucial component of the shovels, the SIVERS lasers.
Exactly. SIVERS is the tiny factory. And the reason this specific two-hop connection matters so much more for SIVERS than it does for a behemoth like Amazon.
Yeah.
It all comes down to scale.
Right, because Amazon is a trillion-dollar company.
Exactly. Amazon is a giant. Marvell is a giant. But SIVERS has a market cap of only $720 million.
Oh, wow. 720 million. That's tiny in this space.
It's basically a microscopic speck compared to Amazon.
Yeah.
And because of their small size, these massive incentivized volume orders coming down the pipe from Amazon are going to help SIVERS disproportionately more than anyone else in this entire supply chain.
Because if Amazon buys, say, $100 million worth of tech to Amazon, that's literally just a rounding error in their accounting.
Oh yeah, they wouldn't even notice it.
The $100 million cascading down to a company worth $720 million, that changes the entire trajectory of the business.
It's foundational. It's explosive growth for them. And yet, the notes point out that the broader markets have completely, entirely missed SIVER's role here.
Completely missed it. How is that even possible?
Well, the market just hasn't connected the dots. The notes position SIVERS as the critical laser supplier for what they call an upcoming hyperscaler optical supercycle.
Okay, wait, hyperscaler optical supercycle? That sounds super intense.
It does, but it's basically just the massive industry-wide shift to using light instead of copper for data centers.
Okay, but I have a pointed question about this because, I mean, if this optical supercycle is truly coming, right, and these architectural changes are basically locked in by these mega cap SEC filings where billions of dollars are at play,
Yeah.
how does the broader market miss a $720 million company sitting right at the base of the funnel? Like, aren't trading algorithms supposed to be hyper efficient at catching this stuff?
That is the perfect question.
Yeah.
And it really comes down to this concept of information asymmetry.
Okay, tell me more about that.
So an algorithm can scrape an SEC 8K filing in a millisecond, right?
Sure.
It reads the December 2nd document. It sees Marvell. It sees Celestial AI. It sees Amazon. It immediately calculates the value of the warrant and adjusts the stock prices for Marvell and Amazon.
Right, because those names are explicitly in the text.
Exactly. But the algorithm stops at the first hop. It doesn't know the engineering bill of materials for Celestial AI's photonic fabric.
Oh, I see. Because the algorithm isn't an engineer?
Right. The algorithm has no idea that to build the fabric, Celestial has to buy lasers from SIVERS. SIVERS is completely invisible in that SEC filing.
Wow. So the bots are literally blind to it.
They're totally blind. Buried supply chain connections like this, they often go completely unnoticed until the actual earnings reports hit.
So by the time SIVERS suddenly reports this massive spike in revenue a few quarters from now, the market will finally see it.
Yeah, but by then, the window of opportunity is closed. The stock will immediately reprice, and the information asymmetry is gone.
That is just wild. It's like a real estate algorithm pricing a house based on the zip code, but totally missing the fact that the house is sitting on top of a massive oil well because oil well isn't on the standard inspection form.
That is exactly what it's like. SIVERS is the oil well here.
Man. So let's distill this whole journey for you, the listener, because we've covered a lot of ground today.
Yeah, we've gone deep into the weeds.
We really did. So we started with what looked like just a really dry SEC 8K filing about Marvell acquiring Celestial AI.
Right, just standard corporate M&A stuff on the surface.
Yeah, but then we uncovered that Amazon stock warrant. Basically a VIP coupon with a locked-in $87 strike price that essentially hands Amazon tens of millions in built-in profit just for buying Celestial's photonic fabric.
And that gave us the structural guarantee, the massive volume of sales.
Exactly. And then we traced those photonic fabric purchases 2 hops down the supply chain, past Marvell, past Celestial.
Right down to Sievers.
Yes, right down to Discover Sievers, a $720 million laser company sitting quietly at the bottom of an optical supercycle, ready to supply the actual photons that make the whole thing work.
It's a textbook case of finding the hidden leverage in the market.
It really is. And, why does this matter to you listening? Because in the world of tech and finance, the most lucrative insights aren't usually in the big, bold headlines. They're hidden 2 hops away in the supply chain.
Always. The real money is in the secondary beneficiaries.
Right. So we want to leave you with a final thought to ponder on your own today.
Think about the scale of what we just discussed.
Yeah, if a massive hyperscaler optical supercycle is quietly kicking off right now, fundamentally reshaping the entire hardware architecture of the internet, what other foundational 2-hop suppliers are currently sitting quietly in the fine print of mega-cap SEC filings, just waiting to be discovered?
They're definitely out there. You just have to look past the first hop.
Exactly. You just have to know how to read the grocery receipt.